Good afternoon, everybody. Take a minute to let everybody get logged into the system here, and we'll get started. Still see people are joining the webinar. We'll let it go for us a little bit longer, and then we'll get started, guys. All right. Well, good morning, everyone. Good afternoon, wherever you're located. My name is Troy Tucker. I'm the CEO and founder of Blue Sky Business Resources. We're a lower middle market mergers and acquisitions advisory consulting firm located here in Salt Lake and various locations throughout the country. Before we get started too much, I'm going to introduce everybody on our panel. We've got two gentlemen. We've got Chris Badger and David Stahl. I did want to take just a couple seconds at the start and tell everybody about the Elevate conference, which is coming up on May 28th. It's a virtual online event. There are 3 hours of CE. We've got a mastermind session and 3 terrific panels set up. We have confirmed Lieutenant Governor Cox for the thought leader panel and business leaders. We're supposedly going to hear back from the CEO of Insperity this week to see if we can have him there as well. And we've got a well-known economist that will be on that panel as well, most likely. So once again, that's May 28th. Please check your inboxes. You should be seeing invites to that. So this discussion today is all about the PPP loan forgiveness documentation, what you have to do to actually secure the loan forgiveness and the steps you got to take. We have 2 gentlemen with us, Chris Badger from Now CFO, who is one of the hardest working guys I've ever met, and David Stahl is right there with him at Hillcrest Bank. David has been processing PPP loans for the last 3 or 4 weeks, or as long as the program's been in place. And Chris Badger has been helping people get their loan applications put together, as well as helping them with documentation. Chris, I'm going to turn the time over to you. I will be monitoring the chat function. If you have questions, please put them in the chat or the Q&A. We will get to your questions and we will get them answered. Thank you. Chris?
Awesome. Thank you, Troy. It's great to be talking with you today. Just to give you a little bit of background, a few months ago, if I had actually 3 months ago now, if I had a client that was going to say, hey, I'm going to go get a loan with the SBA, I would just kind of cringe a little bit and say, yeah, you guys get ready for a long process. It's going to be painful. It's going to take a long time to get through, and it'll be very difficult. And then now they've got these PPP loans that you're getting applications in, and some banks like Hillcrest Bank can process those and get you money within a few days because they are going to hand carry your application through. Some of the larger banks, it's been a tougher road for them because they just don't have the processes in place. But all of a sudden, all these companies are getting funding, and they're like, hey, they told us we could get this forgiven. What do we have to do to get it forgiven? And so that's why we've put this presentation together. We're going to cover a lot of details. We'll make sure that all of you get a copy of the slides after, and we'll also be answering any of your questions. So if you do have any questions, go ahead and send them to the host here. And so just realize that, I am not an attorney. I am a CPA, but I'm not giving any tax advice. What we're trying to get here is get you the information as we know it today. And David will show you, he got 2 new pages this morning that just came out through the SBA for some payback guidance. So it's coming out daily, it's changing. Just realize that what we have today is what we know today. And I think for the most part, it's what's going to be in place here for the next couple months. So really, this is specifically for the PPP program. This came into place back on March 27th. At that time, it was the largest spending bill to over 2 trillion. Part of that was specifically for these PPP loans. Could be up to $10 million, but it was really based off of your average payroll, your average 2.5 times your average payroll. But then you only have 8 weeks to spend it. So realize that throughout there's little inconsistencies. Also, remember, this is a loan. A lot of people get this kind of confused that, hey, I'm getting this free money. No, you signed a promissory note. You've signed a loan. If you go through the right process, the intent is that it can be forgiven. Before we jump into the examples and stuff, I just want to talk about a couple of broad definitions and things to think about. And so specifically in the CARES Act, it's going to tell you expenses incurred and payments made. And that kind of says, well, you got to make the payments in order to have it forgiven. It's pretty definite on the cash payment part of it. But incurred, when you look at the true definition, it's not a GAAP accounting definition. And so there's a lot of confusion over whether if you have back expenses that were incurred in January and February, can you pay those now in your 8-week period and get forgiveness? They really haven't said yes or no. We don't have enough guidance on that. But remember, throughout the CARES Act, it's expenses incurred and then payments made. So you got to make the payments within the 8 weeks to get forgiven, but incurred is more unknown, okay? Specifically in the CARES Act, it says this loan forgiveness, if they forgive it, it won't be federally taxable income, right? But wait a minute, IRS jumped in. They've got their 2 bits in. They sent out an IRS tax notice, 2020-32 IRS tax notice. And it's basically said that if you have a loan forgiven, if you use those proceeds for payroll expenses and then you had it forgiven, you don't get to take a tax deduction for those expenses. And so in the IRS mind, they're making it so that you don't get benefit of double taxation or no taxation. But in essence, what it is this is another burden for small businesses. The Senate has sent up a bill to override that. It's unknown at this time if that's going to pass. It's very, very, very seldom that the Congress overrules case law, which is what this is based on. And so it's not to say that they won't. These are unprecedented times. If it was a year ago, I would have said that the Congress doesn't override that type of rulings. And so, but we'll have to see. Just realize that any expenses that you have that were used with these proceeds that are then forgiven, you don't get to take a tax deduction. The other thing I want you to realize through this forgiveness process is guess who's going to give the approval for the forgiveness? It's your bank or your lending institution, okay? You're going to have to send that application for forgiveness through your bank, and they're the ones that are going to review it and approve it, okay? And it's been interesting because the SBA has put bankers into a position that they've never been in. This is not a process they've ever done before. And so there's a lot of, it's great that we've got a very good banker on the call with us today because there's a lot of unknown things there and banks are still trying to figure out how they're going to do this forgiveness process. So let's talk big picture wise and then get into a couple of examples. And so to be forgiven, to go through this forgiveness process, you have to spend your money on these approved PPP loan expenses. So you have payroll, that's a 75% bucket. So they came out and they said, guess what? 75% has to be on payroll, at least 75%. Other 25% can be this mortgage interest, rent payments, other interest payments, and utility payments. The payroll expenses, It's not just W-2 payroll, but it also includes group health plans and group retirement plan fundings, okay? So payroll, W-2 wages, plus group health and group retirement benefits, that's the 75% bucket. The 25% bucket, that's gonna include mortgage interest on a building that you're buying through your company, rent expense, and that can be both real property and personal property, equipment loan or equipment leases. And then other interest if you had other debt that was put in place before February 15th, and then utilities. Utilities, think heat, power, electric, gas, internet, phone, and then they put in this transportation. They didn't really define that, but a lot of attorneys look at transportation, and your utility payments that would be associated with that would be your fuel for your vehicles, okay? So fuel on a monthly basis.
Question.
Remember, oh, go ahead, Troy.
What about payroll fees charged by like ADP or Insperity or something like that?
No, that's not forgivable.
Okay.
So specifically gross payroll, W-2, okay, group healthcare, group retirement benefits, and state employer paid payroll taxes. So usually state unemployment that the employer pays is forgiven. What's the big thing that's left out of that is your Social Security, your FICA, and your Medicare. So FICA and FUTA are not forgivable. And so a lot of companies are going to have to get a special payroll report to come up with that amount, because it's not the total amount you're funding. Okay. Good question, Troy.
Here's one more, Chris. I don't want to take you off your train of thought, but we're kind of talking about this. As an independent contractor, how do I pay myself to comply with payroll under PPP within the 8 weeks timeline?
We'll go through a specific example for a sole proprietor at 1099, but you're in a special category. Guess what? You get 50 seconds forgiveness of your Schedule C net income for 2019. And so it doesn't really matter what you pay yourself. What you're going to have forgiven is 8 weeks out of 52 weeks. So 8 over 52 times your Schedule C net income. Okay. And so that one's a little bit separate from the payroll, but when you have employees, it's everything that's going through payroll.
Okay. Did you cover healthcare benefits? They're included, right? I think I heard you cover that.
Yeah. So within the payroll bucket, that 75% is going to be your group healthcare benefits and your group retirement benefits. So think W-2 wages. Everybody's maxed out at 100,000. That's the maximum annualized salary amount. Okay. And then you can also include paid vacation, paid family medical leave or sick leave. Those can be included in that. And then remember also, you get to deduct your state employer paid taxes. So that's usually state unemployment, okay? Stuff that isn't included, remember, you don't get to take into your 1099 contractors. If you have employees that are outside the US, you don't get to include them. Everything's capped at 100,000. You don't include your federal employment taxes. So Social Security, Medicare are not included, okay? And then also, you can't double dip. So if you get a PPP loan and you want that loan forgiven, you can't take your payroll tax credits under the Family First Coronavirus Response Act, your FFCRA, okay? You can't double dip.
What about a bonus payment to employees who make over 100,000 a year?
You're capped out at 100,000. So if you give them a $5,000 bonus, that would not be included. Okay. So it's maxed out at 100,000. And again, that W-2 wages, that includes payroll, salary, bonus, commissions, anything that would go into your W-2 amount. Okay. So whether you call it a bonus, whether you call it a commission, whether you call it hourly wages, you're maxed out at 100,000. Okay.
So I got one more question here, Chris. I want to order get through this one pretty quick. Says my payroll remits 2 times per month, not every 2 weeks. Does that mean even though my payroll liability covers the full 8 weeks, if my payroll doesn't fund 4 times inside the 8 week clock, does that mean I can only have the payments made qualify for have the 3 payments made qualify for forgiveness?
Yep. So realize that the 8 weeks is starting for everybody. It's different. That 8 week clock starts when you get funds in your account. And it's very clear the guidance is that payments have to be made in that 8 weeks. And so if your payrolls don't line up, you ought to schedule an early payroll, because if it's not paid, it's not eligible for forgiveness. Okay, that's very clear.
And Chris, I'm gonna jump in on that too, real quick, because you're gonna hear me say we probably should have planned this better, Troy, because there's a committee meeting happening right now addressing some of these misses with the SBA and the Treasury and the bank's advocacy arm that participate in SBA lending. It's the National Association of Government Guaranteed Lenders, otherwise known as NAGL. They're lobbying for just that very point and a few other points that may have been misses as we speak. And so from a banking perspective, we should have a good bit more clarity on Friday, specific to that person's question. So.
Yeah, I can tell you, we were working with a client on last Thursday. They do monthly payroll, so they only pay once a month, and they were going to have a whole month fall out of their period, their 8 week pay period or 8 week covered period, and so they were going to schedule an early payment of it. Obviously, if that changes, we'll let you know. But that's one of the biggest questions: is what happens with accrued payroll. And so, yeah, if it's not paid right now with the definitions and the law as it stands right now, it won't be eligible for forgiveness. It might change, but just realize that right now you might want to make plans to do an early payroll. So let's go into that forgiveness phase and talk a little bit about the overview for that. And so remember, once you get to PPP funding, that starts your 8 week clock. Okay, so you have an 8 week covered period. That 8 weeks, that's when you have to make your payroll, your utility payments. The intent of the CARES Act is that if you laid off or furloughed employees, you're going to bring them back. Okay, and by June 30th, hopefully you've rehired your employees and you've restored their salary levels. Okay, now that's the intent. So think of that June 30th is going to give you that magic balance sheet date, that magic testing date. Okay, if you don't have everybody back working, and you don't have everybody back working and making about the same amount of money they were before, your forgiveness amount is going to be reduced. So realize that they're going to take a look at your total full-time employee count, so your head count, and they're going to take a look at how much they made during the 8 weeks. And if that's decreased, your forgiveness is going to decrease. Now, another big thing that the SBA put out after the CARES Act, because this is not in the CARES Act, the SBA gave guidance that 75% of the total loan has to be spent on payroll. Well, now, if you can't get to the 75%, is that going to decrease the amount you can have forgiven? Yes. Right now, the guidance is that 75% has to be, at least 75% has to be payroll. Okay, so keep those in mind as we go through the example. And let's go through the actual calculation. It's going to be a 3-step calculation. I simplified what the AICPA put out with their 5 steps. And so the first step is we're going to calculate our total allowable costs. So our first bucket is that payroll expense bucket, 75%. Second bucket number 2, is going to be our other approved expenses. So think utilities, lease expense, interest expense.
Does lease include vehicles?
Yes. So in the CARES Act, it didn't state it has to be secured by the vehicle. It has to be mortgaged to the vehicle. And so if you have an unsecured loan, no. If you have and when I say loan, excuse me, if you have a lease, if you have a rental agreement for equipment, including vehicles, they can be in the approved bucket. Okay.
This is kind of an interesting question here, Chris. What if my furloughed employees found other work? Can I hire replacement headcount?
Yes, yes. So here's one of those things where, and we'll go through this with the documentation, is, it's document, document, document. And if you have an employee that you've laid off and furloughed, if you make them an offer in writing, and if they can't come back, or if they've got another job, or if they're afraid to come back, say think they're going to get sick, if you have that documented, what the SBA has said is that will not negatively affect your PPP loan forgiveness. Okay, they haven't given us examples, but it won't count against you when we go through step 2 and 3, which is after we come up with our total allowable expenses, we then have to calculate a headcount reduction, and we have to calculate a salary reduction. And so this is reduction of your total forgiveness amount. But if you have an employee and you put it in writing that you've offered them to come back, and for whatever reason they don't, then you're not going to have to be negatively impacted with that. Also, if you hire somebody as a replacement for that, I think you're meeting the spirit and the intent of the law. So let's go through step 1. It's pretty quick and easy with what we've already talked about, that 75% payroll. So W-2 pay, health benefits, retirement benefits, state employer paid taxes, okay, state unemployment. That goes in your 75% bucket. Your 25% bucket, you put your mortgage interest if you're buying a building, interest on debt, and again, it has to be incurred prior to February 15th, and then rent or lease, and they don't distinguish between real and personal property. There's been a lot of attorneys have asked questions about capital leases. We don't really know yet. We need more guidance with that, but rent and lease expense for real and personal property to be included. And then utilities, heat, power, water, internet, phones, transportation.
2 questions. Is it permissible to spend 100% on payroll versus just the 75%?
Yeah. So the 75%, think of that's the lowest bar, right? And so if you have 100%, wow, that's all good. Okay. And remember, what does the PPP stand for? It's the Paycheck Protection Program. It's payroll.
Right.
And so you're going above and beyond what the minimum requirements are for the SBA. So that 75% bar, that's the lowest. If it's 100%, it just makes your forgiveness easier.
Going to jump around just a minute. On the rent expense, are CAM fees included as part of the rent expense?
As long as your CAM fees are part of your rental agreement and as part of your lease agreement, then there's an argument that that's part of your monthly lease, and I would go ahead and include them. Okay. If it's a separate item, then it's a much more gray area. Okay. But if it's part of your lease agreement, I would go ahead and include those, because that's what you would have paid in January and February before this happened, right? And so it's part of your monthly expense. The intent is that you would have your working capital expenses paid. And so they're trying to get you in that kind of monthly cycle. And if your CAM fees are part of your monthly rent expense, it should be included. Okay.
What about, is workers' comp, is that included as part of your?
No, workers' comp is not. Workers' comp is an insurance and is not included, even though a lot of people pay that with payroll, but it is not a forgivable expense.
Okay.
Hey, Troy, I was going to make one comment on rent. I don't know how broadly it's known by this audience, but Utah has announced a rent assistance program for those who are still looking for assistance with maybe some of these added expenses. And so to that individual's question around 100% of payroll, if they want to use 100% of the PP on payroll, there may be other assistants out there that could be eligible for companies that are still needing some extra help. And so, go to the EDC Utah webpage or South Valley Chamber or Salt Lake Chamber, and you can probably, or coronavirus.utah.org, and you'll find out more details on the rent assistance program that the state of Utah is standing up.
Yep. Those are great programs, and I've had a couple clients have done the applications for it. So as we go through our forgiveness calculation, remember step one, our maximum allowable forgiveness. Now steps 2 and 3 are reductions of those amounts. And so you first calculate your total amount you're going to have forgiven, and then you're supposed to go through these reduction calculations. The way you can get out of doing those reductions are through the safe harbor. Okay, this exemption for the full-time employee equivalent reduction and the salary reduction, you have to hit both of these. So you have to have all of your people back working on a magic date, June 30th, and any salaries or wages that you reduced between February 15th and April 26th, you have those restored by June 30th.
What if an employee voluntarily left after February 15th?
Document it. So it's unclear. There's really no guidance because people, leave jobs all the time, and you've got new employees. So if you haven't replaced them, make sure you document that it was something that you did not lay them off or furlough them. And so they should not negatively impact your calculations, but make sure you document it, right? So as we go through these 2 next calculations, remember you can get out of doing those calculations if you can meet this safe harbor exemption, okay? And that's to have your head count back up by June 30th, and any wages you did, any reductions, back up and restored by June 30th, okay?
Now, what about an employee being terminated for cause during the 8-week period?
Document. Because things are going to, I would think that you would be able to not be impacted with that, but they really haven't put any guidance out on it. The intent is that you would have your head count up. And so if you had somebody you fired for cause, you fired them for, let's say they didn't show up at work, you fired them for cause. If you have a rehire, I would include them in your head count. And so it's not so much that exact same person, but it's getting your head count back up, okay? So let's go through the calculation for that step 2 reduction in your total allowable or maximum forgiveness amount. You're going to take that total amount that we calculated in step 1, and you're going to times it over your full-time employee equivalents for the 8-week period. And then you're going to compare that with your average monthly full-time equivalent or full-time employee equivalent last year. So February 15th to June 30th. Or you're going to look at it as of January 1st through February 29th of this year, okay? And you want the lowest one, the lowest amount or lowest number there. And so let's go through a quick example. You get to choose whether you compare to last year or if you want to compare to the first 2 months of this year. And so let's just go through a quick example so you can see that. We've got a company, they get a $100,000 PPP loan. The average full-time employees during the 8 weeks was 21. If you look at last year, average full-time employee equivalence was 35. If you looked at January and February of 2020, full-time employee equivalence was 30. Okay, so we're going to use 30. And so we're going to use that period here at January and February. So we're going to take 21 average employees over the 30 average employees. And so we get a maximum amount of 70,000. And so what this means now, We took out $100,000 loan. We may have paid out $100,000 in payroll. We should have had that, been able to get it forgiven, but because our head count was down, we're only going to have 70,000 forgiven. And so 30,000 is going to become a term loan. And remember, that's 2 years at 1%. Step 3, salary reduction. And so this is for all employees that are less than 100,000. So if you're above 100,000, you don't get caught up in this, but if you're under 100,000, you're going to take a look at that total forgiveness amount, and that forgiveness amount is going to be reduced by the total salary and wages of an employee during the 8-week period that is in excess of the 25% of the salary and wages that the employee had during the most recent full quarter. And for some companies, that might have to go back to the December 31st quarter. And so what you're trying to do is compare how much an individual made in the previous full quarter. And so it's been very inconsistent with, they haven't put out any guidance yet. You're trying to compare an 8-week period with a quarter at 75% of a quarter. And so it gets pretty convoluted. The intent is that you're going to bring your head count back up. And if you did mandatory salary reductions, is that you would have those all brought back up to what they were by the June 30th testing date. And this is one area where we're looking for a lot more guidance. Let's just do a quick example here. So if you have in quarter 1, 2020 payroll costs for an individual, you're going to take what they made in the first quarter, $20,000. During the 8-week period, you cut the employees' wage and salaries, and they only make $10,000. Since $20,000 times the 75%, you're going to come up with an amount of $5,000 that's going to have to be repaid. Now, the inconsistency is you're looking at a quarter that's 13 weeks, 75% to get to an 8-week. It's not an apples to apples comparison. But remember, to get out of this third step, you do your safe harbor. Okay, bring everybody back on board by June 30 and bring any salary reductions you've done back up by June 30. All right.
Is it by June 30th? Sorry,
go ahead.
June 30th, or from the 8-week period starting when you get your loan dispersed?
That's a great question, because in the CARES Act, it's all June 30th, no matter when you had it funded, right? But for most companies, they're only getting funding right now. I think David's going to talk about how much money is still out there. There's still billions of dollars still left to be funded, right? And now you're running into 8 weeks into early July. And but in the CARES Act, that June 30th is the magic date, okay? All right.
Here's an interesting question. If I don't meet the forgiveness requirements, what happens? I heard an attorney say he thought there could be criminal issues. I just think you lose out on the loan forgiveness. Is that correct?
Yeah, so the intent of the loan, remember, is it's a paycheck protection program. PPP loan is for payroll, right? When you signed your loan documents, you signed stating that you were going to use it for payroll and approved expenses. If you're going to use it for other expenses, yes, you could be crossing over. If you don't use it up within the time frame, let's say you didn't bring all your employees back and you had an amount left over, if you use that for payroll in August or September, it's still an approved expense, but after your 8 weeks, it becomes a loan. And so you're going to have to pay it back. And if you're going to use it for other things, this is not the PPP loan program to buy a houseboat at Lake Powell. This is for payroll protection. You're supposed to be hiring back your employees that you've laid off.
Here's a good question, Chris. If I have unused PPP proceeds at the end of the 8-week period, can I pay out bonuses to employees or temporarily increase compensation during the 8-week period under that make under 100,000 a year?
Yes, yeah. So that's a great plan. I've actually helped a couple of companies come up with, it's going to be their coronavirus bonus. Now, the one thing you need to take into account, which was great with that, the person who asked that question, is for all the employees making less than 100,000.
Right.
So this is not an owner bonus plan, but if you did a bonus plan for all of your employees, so a group bonus plan that runs through payroll, yes, then it's going to be part of the forgiveness process. And so with those two clients, I know one of them was going to do a $500 bonus for all their employees that have stuck with them.
Mm-hmm.
And then the other one was looking for kind of like a $250 because they wanted to maximize what they had forgiven. And so as long as it's going out to all employees, I think you're good. If it's going out to the owners or senior management, not good. Not going to be part of the forgiveness.
Okay. What about, did you answer this already? Payroll taxes?
So payroll taxes, Social Security, Medicare, your FICA and FUTA are not forgiven. They're
Okay.
not forgivable expenses. State unemployment or state employer paid taxes are forgivable. Okay.
Mm-hmm.
After you go through your calculation, right? You know, you can react to this coronavirus in lots of different ways. But if you want to maximize, plan it out, model it out, make sure you can show what you spent the money on. If you plan for it, you know, you can maximize your forgiveness piece of it. When you're tracking it, put your PPP loan into a current liability. If you received a disaster loan, if you received a disaster loan grant of $10,000, keep that separate, okay? When you go back to the forgiveness, if you receive the $10,000 grant, that will be taken off of your forgiveness amount. So make sure you keep them separate on your balance sheet, and you also track your expenses. If you received in a disaster loan, don't use those proceeds with the proceeds of the PPP loan to make the same payroll, okay? Keep them separate. Track your disaster loan in a long-term liability, okay? It's a 30-year payback, so it's gonna be a long-term loan.
What about at the end of the 8-week period? If employees are laid off or plan to be laid off after the completion of the 8-week period, would that affect the forgiveness qualifications?
So the headcount employee headcount test and the salary reduction test is as of June 30th. And so there's no guidance out there. And so if you brought everybody back and they're all working on June 30th, you meet that test. If you lay them all off the next day, do you still meet the test? It's unclear. We don't have any guidance. The intent is that you'd bring them back and you'd keep them working. But every company is different. I've got a couple of companies that are in the hospitality space that have already decided that they're going to take their PPP loan and they're just going to treat it as a loan, and they're not going to start up their operations till October, September and October, because they don't have any work right now. They're in the hospitality and nobody's doing events, nobody's renting hotels, nobody's traveling. And so they've made the strategic decision that it's going to be a loan and they're going to use it for payroll in November and December. And so every company is going to be a little bit different with what they're going to pay out during the 8 weeks and what they do. And so, you know, I'll be honest with you, Troy, it's going to be a tough summer, right? And you may be able to keep people working for the next 8 weeks, but after that funding runs out, can you continue to employ them? You may not be able to. But again, the testing date is just June 30th.
Okay. What about hours is considered full-time? Is that still 32, or what's the amount of hours employees got to be working to be considered full-time?
So no guidance yet. AICPA states let's use the Obamacare, the ACA Act definitions, because there's pages and pages of that, but the general rule is 30 hours. I think that most banks or lending institutions are going to do 30 hours because that's what they've seen before. Or, you know, some of the HR organizations want 40 hours. Just make sure it's consistently applied. But we don't have any guidance yet. If the SBA does put out definitions of the full-time employee, then we'll get that out to everybody. But I would use the 30-hour test right now because there's a lot of documentation and regulations on that through the ACA, and it's kind of well defined.
Along these same lines, how will they handle full-time employees who are working part-time of their own choice because they have childcare duties? Will we need to pay them at a full-time rate starting 6:30?
Document. And so if it has an impact with what your forgiveness amount is, make sure you have that documented. And it's really kind of up to you as a business owner of how you want to pay. Remember, to have it forgiven, you have to spend it, right? And so if they have reduced pay, it's going to impact your forgiveness amount. All right, let's kind of finish up a little bit with the documentation piece. And so this kind of, think of it, at the end of the 8 weeks, you're going to put together a forgiveness application, a packet that you're going to send to your bank and ask for forgiveness. And so you're going to have copies of all your payroll reports. Remember, your forgivable payroll expenses, it's not just what you're funding in payroll. It does not include any of your Social Security and Medicare payroll taxes, but it does include your state employer paid payroll taxes. It also includes your group health benefits and your group retirement benefits. So document, put the reports and stuff together for the other expenses for utilities. Make sure that you've got a invoice and a copy of the check if you're paying by check. If you're paying by ACH, you have a copy of the ACH. You want to make it very easy for a bank to review it. Now, as the owner of the company or management for the company, you're going to sign a certification that this information is correct and that these are all forgivable expenses. And so you're going to certify them. The bank is not going to certify them, and they're not going to audit them. All they're going to do is review and approve. And so Dave is going to talk a little bit about that process, but remember, the owner or the senior management that signed for the loan is going to be the person who's going to certify that those are all forgivable expenses. But in this process, just remember, it's document. Make it very easy to follow your process and to have it forgiven.
This is an interesting question. My lender is disallowing anything besides payroll benefits, retirement. What should I point to tell them rent, utilities, etc. are included in the loan forgiveness?
CARES Act. That's very well defined. And so I can tell you flat out the banker's wrong there. I'm sure David can comment on that. It's specific in the CARES Act.
I was going to say the CARES Act.
Exactly. Yeah. That's not what the law says at all. So, yeah.
And Troy, if you'd like, have them, I can send them all 890 pages of the CARES Act. So, I'm trying to think of, I think I have a highlight tool, but it's very clear that those are in there.
Okay. Just a real quick note. We have a lot of specific questions regarding timing that are in the Q&A. We'll get to those questions, David and Chris will. And for those of you that want to stick around longer past the hour, feel free to, and we can continue to ask the questions. We answer the questions. We have got a pile of questions coming in, guys.
Well, and for the participants, we're going to save all the questions And in the event that we either can't answer it or don't get to it, or we missed it because there have been so many questions, we're going to aggregate these. And then between Chris and I, we're going to make sure that Troy and the team at Blue Sky have follow up on all of them just to make sure it's clear.
Absolutely. And we will be sending a link to that toward tomorrow or Friday. I'm not sure when that goes out. So you will get all of your questions will be answered, and you can retrieve that information.
Awesome. Remember, as part of the documentation piece of it, you're also going to have to start getting your information together for your employees for last year and this year. All that payroll information, make sure you've got it in one place in a secure subdirectory or a secure storage. But start gathering that information together so you can prove quickly and easily that you've got your head count back up and you've got your payroll amounts back up, okay? And then as you're tracking all those other expenses, rent expense, utilities, make sure you've got a third-party receipt or third-party invoice to prove out and document each of them. Make sure you're tracking and you know when you're going to spend them, right? And we'll talk about this a little bit more with the timing, but you got 8 weeks to spend it. In general, if you have a monthly expense in that 8-week period, you should have 2 payments, but project them out. Let me kind of finish up real quick. In order to maximize this forgiveness amount, you got 8 weeks. For a lot of companies, your time clock's already ticking. Build a forecast, push it out for the 13 weeks when you're going to spend, when you're going to do payroll. It's very clear right now today that you have to spend it in order to get the forgiveness, okay? And so make sure you don't get caught up with having 2 weeks of accrued payroll at the end. Make sure you've spent what you want forgiven and that you're not short. If you are short, then you have to come up with, do you want to take out the loan or do you want to pay it back early, okay? Which you can do without any prepayment penalties. So I know that's a lot of information we've gotten out. We're going to stay on and answer questions, but I want to introduce you to one of the best bankers in Utah, probably the best banker, David Stahl out at Hillcrest Bank, who's probably been working 18-hour days for the last 4 weeks, helping get companies get their PPP funding. And it's always great to have a banker's perspective. So I'm just an in-the-box accountant. And bankers are just a whole different breed, but David's one of the best. And so let's take it away.
We are definitely a different breed since April. Troy, are you getting some feedback on my end?
I am. One quick question, Chris. Can factoring costs be included in the 25% as an interest charge factoring costs?
It has to be for a loan that is mortgaged to equipment or property, and it had to be in place before February 15th. So if you're factoring an invoice in April, it will not meet that requirement. So it has to be in place before February 15th, and it has to be secured by property. So it has to be mortgaged to property.
Perfect. Thank you, Chris. All right, David, you ready?
Yeah, trying to share the screen. I think Chris has got to take his presentation down.
Yes.
There you go.
And okay, you should be seeing mine now. Yes, no?
Yep, see it.
Great. All right. So thanks, Troy. Thanks, Chris. I appreciate the, we've done this a few times now, you and I together, and every one of them just becomes more and more fun. But just let me apologize first for all, on behalf of all the banks that have done this, because, we were reconciling this morning with my SBA group head. And since, in the 5 weeks, 6 weeks since PPP has been a thing, the SBA has announced seven different interim final rulings, 3 different versions of the application, 30 different FAQs, and this was the one that got me. 8 days after April 3rd, which was when we first, all banks, well, many banks started to take applications. 8 days after, so April 11th, is when the SBA and the Treasury gave us guidance on actually how to calculate your total loan amount. So, we apologize. We were, operating under the best guidance that we had at the moment, and as I mentioned earlier, there's hearings going on actively right now that are going to address some of the missteps, and many of which were questions that the group has asked so far. And so I would just encourage you to stay tuned to your bank, your accountant, now CFO, Blue Sky Advisors, et cetera, for the latest information coming out, because we do anticipate between now and Friday, there will be a great deal of clarity that's provided, because technically I want to say it's next Friday or the following Monday is when we is the first 8-week period that has from the first eligible funding date. So we're getting ready as a bank, and we'll start working with all of our clients on their 8-week eligibility period. So much like Chris, again, we got to fit that disclaimer in there. We are doing our best to give as much information as a bank. We're going to give you a perspective from a bank, not a tax, not a legal opinion. So reach out to your providers there for your unique situations. The view I'm going to share is kind of how we're looking at it from Hillcrest's perspective, and in our family of banks. We have a few of them, and so it's our perspective. And as you can already tell from some of the questions and comments on this call, banks are looking at it differently. Whether it's informed or misinformed is to be determined. But from our perspective, and I know Chris has kind of touched a few of these things, what we know at this point is your forgiveness application can be made starting at the 8-week mark from the date you were funded. The process is going to vary from financial institution to financial institution. By next Friday, as I mentioned, we are going to have the specific exact information that's required, because as many of the questions have alluded to, there's still a lot of lack of clarity on what's included, how to document it, what's the process, et cetera. I can tell you from Hillcrest's perspective, there will be an attestation form. There will be a portal that we will do on your behalf, and then we'll just gather the data that is required that Chris mentioned, that will be required to support the forgiveness amount and the calculators behind it. So, the guidance around how to calculate forgiveness is most current at this point. So the formulas that Chris shared are the same that we've seen. There's been no changes. And I want to say we received that guidance earlier this week. So I want to say it was either Monday or Tuesday that we started getting that data to understand how, the different steps and how things were going to be calculated and formulated. So as I mentioned, there's active discussions, a couple other things that may address some of the questions. So the political landscape. So Congress never intended actually for the 75% to make its way into it. It just did. So the 75% formula was somewhat of an arbitrary number, and so there you may actually see some leniency there around that based on some of these hearings that are happening right now. So more to come on that. That may change, but that's kind of the environment that we're all operating in right now. Keep detailed account records. I think Chris touched on that. And the big thing that I would say is make plans to account for some portion of this loan to not be forgiven. When you look at sort of how your business has responded based on how the forgiveness calculations will unfold, I would anticipate that whether you didn't use it all or you've had to make cuts, there will be some portion of this loan that will not be forgiven. So think about, to Chris's point, the 13-week cash forecast. How have you started to return to business as usual, or some sense of normalcy, and then figure out what's the best method to get some of this, a portion of this loan forgiven. If you haven't used it all, it might be better to not try to use it all versus trying to use it all and then end up having, like in Chris's example, $30,000 unforgiven. So a couple of things, I took the approach, a couple of things that you should know now that you have a PPP loan. Banks and financial institutions who issue these loans will be responsible for helping you with this process. So don't think you're alone. Your banker will be the one that will walk you through this process. For some of the larger banks that did a lot of the online portals and leverage technology to kind of process these things, I can't speak for those. I know at our bank and our family of brands, we took 2,300 applications and got authorizations and fundings for 2,300 applications. So we walked every one of them through the process, as Chris mentioned. And so we anticipate that we will walk all 2,300 of them through the forgiveness process as well. You'll provide everything to the bank. The bank will submit it on your behalf. You'll do some attestations, as we've talked about. It's unclear, the timeline so far. I know that'll be one question on a lot of people's minds as we start going through this process. I don't have any guidance on how long it'll take to get this, to have your forgiveness processed and determined. The biggest piece of advice I can give everyone on this call, if you don't have a banker or a direct line of contact at your funding source, get one. If the funding process taught us anything, those who got secured funding in round one or found the process to be fairly easy generally had a banker or somebody they could wear out if they needed an update. And so you've got another shot at that. Given how important this forgiveness piece is going to be, I would encourage you, wherever you got your loan from, whether it's somebody working at a branch, whether it's somebody, who works in the business banking group, the commercial banking group, find somebody and make sure that they're an advocate on your behalf, because, trying to navigate this alone will just be an epic fail on your part. It's just going to be a challenge. So you need somebody to be able to help you walk through the process and advise you through sort of the changing landscape.
David, one real quick question here. This is about the EIDL loan, the EIDL loan. It says it's based on employees. What can it be used on to have it become a grant and have it forgiven? I didn't think that loan could be forgiven. There's a $10,000 piece that's given up front that is forgiven. The EIDL loan is not, though. That's a long-term SBA program, from what I understand. Is that correct?
Correct. Yeah, and actually they changed it from first round to second round. It used to be, it was intended, the program is designed to be a $10,000 grant up front, kind of like an insurance payment. Like if you have an insurance claim, they're going to stroke you a check on site and then do their adjusting. They changed it, and they in the second round of funding, I heard people who were applying for the EIDL loan began getting awards based on number of employees. And so it basically factored into, it was like $1,000 per employee. And if you had more than 10, then you got 10 grand. And that portion is a grant, but to your point, it is a loan. Chris mentioned it should be considered a long-term liability on your balance sheet, because it is in fact a 3.75% loan for up to 30 years, depending on what your situation was. Chris, were you going to say something?
Yeah. So Troy, one of the things to realize is that if you just got the $10,000 grant, so you only got the grant and you got a PPP loan, when you go to forgiveness, they're going to take that $10,000 off of your forgiveness amount. Okay, so it's going to be it's going to be included in your overall forgiveness, but it will impact specifically your forgiveness amount through the PPP loan. If you have, like, let's say you got a $100,000 disaster loan, it's a loan. You're going to have to pay it back. It's not forgivable. Right. Now, originally, 2 months ago, the intent was, hey, we'll get these disaster loans out, and then if you get a disaster loan, they can refinance them in a PPP loan. Well, I'll be honest with you, the EIDL loan, the disaster loan program has been a complete disaster, and they're so overwhelmed with the applications. Out of probably 30, 35 applications that we've helped clients do for the disaster loans, I think we're up to 12 now that have gotten the grants, and we've had none of them fund for an actual loan. It's right. Only been the grants.
And that loan can be used for any purpose in the business. There's no restrictions on that.
The intent is that it's working capital, and you'll see the same type of things. You'll see payroll, lease, rent, mortgage, utilities. You'll see those same. There's a little bit broader definition, and it's really operating expenses of the company could be included with that.
Okay.
Supply chain, vendors, things of that nature.
Gotcha.
You know, and to Chris's point, you know, coming from Florida, we saw a lot of these programs stood up. The IDLE program was really intended. It's not intended to be it was not intended to be a program that was stood up for all 50 states. It's, you know, a tornado rips through, a hurricane rips through, there's a fire, like in California, you got 200 businesses in a region that need to apply for relief, and their down period is like 2 weeks. That's what that program was for. It was not intended for a saving lifeline for businesses that are going to be shut down for 8, 12, 16 weeks across the entire country. So they did the best they could with that. Hopefully it got some money in some people's hands, but to Chris's point, I think I've talked to maybe 2 or 3 people that received any amount of the money. So that one was a tougher program, but I think we alluded to this. Let me go back to the presentation here real quick. I think we alluded to this, but you have until tomorrow. If you're feeling some uncomfortableness, if you received money and you've seen sort of the program unfold, you've seen some new clarity, you've gotten some new guidance, and you're sitting there and wondering to yourself, did I really need this PPP loan? You can pay it back until tomorrow to work with your lender to pay it back with no questions asked. And so after that, there's a couple of things that come into play. Just as perspective, today we've actually received 12 proactive repayments for people who saw the new guidance, saw the new program parameters, and decided that this money wasn't for them. So one of those things that came out was anyone who's received a $2 million or more PPP loan could or will be subject to an audit or review of the use of funds. That I think is the one that really made a lot of people nervous, and why people have decided to pay the funds back proactively. But I can't sit here and tell you what that's going to look like, or who's going to be selected for that. But just know that if you've received a PPP loan for more than $2 million, you may be subject to detailed review and audit of how those funds were used. There's a number of changes to how employee types. I think Chris mentioned a little bit to that. We've actually got a couple of clients that are sitting there and they've received their money and they're thinking, well, wait a second, all of my employees are seasonal. And so as you start to step down the waterfall of calculation, it's, how do I calculate this, and does it make more sense for me to just not open or delay opening versus actually taking the money and running the risk of it not being forgiven? And so take a look at that. It's in one of the last 2 interim final rulings and FAQs. And so you'll see kind of what that means for your individual business if you happen to be in that situation. And then as we've referred to, any remaining balance that's not forgiven will be interest only it's actually for 18 months, even though the total program is 2 years. The way we believe it's going to work is, because running concurrently, is that any existing SBA loan funded before September 27th of this year actually is also having its payments being made on behalf of the SBA. And so if you think about the timing here, what will happen is there'll be a mechanism in there that you'll have this 1% loan for the balance, but the SBA is going to make your payment for the first portion of that, and then it's going to roll into that 18-month conversion period thereafter. So, and I think those are just really the high points right now that I wanted to share, and just knowing that there's going to be a good bit of information coming out over the next few days. One of the things that we're doing at Hillcrest, and we're happy to partner with Blue Sky or now CFO on this, is we're actually going to create live stream webinars that we'll be able to disseminate to companies and clients and things of that nature to help get a lot of these very specific questions answered. So we're going to walk through a sole proprietor forgiveness application. We're going to walk through a corporate application forgiveness process, and we're going to walk through an independent contractor forgiveness process, because all 3 of them are going to be different. And so we're going to.
On those too.
I'm sorry?
we've had lots of questions too.
Yeah, so we're trying to stand this up, and it's going to be something that we're going to do internally, and we're going to be able to take questions from the community and from our clients and ask them on behalf of, versus trying to get 2,000 people on a webinar and walk through all of their individual questions. And so that way, once these questions get asked and answered, we can then send that out to everybody. So as they're contemplating the forgiveness and working with us or their bank, they'll have the very specific detail that we're getting directly from the NAGL and the SBA. So that just kind of concludes the parts that I want to cover. Troy, I'll turn it back to you, and we'll maybe take some of these questions and see how far we get.
Yeah, we do have a pile of questions. We are at the top of the hour, a little bit past, in fact. So I can start kind of going through these questions that we've answered, and we'll see if we can't figure out some other ones here. I'm just going to start at the top of the Q&A question. There's 39 open questions in here. I think we've covered other interest. Is that forgiven?
As long as it's secured by property, it's mortgaged to property and in existence prior to February 15th.
Okay. Done. What about a SEP IRA payment? Can you fully fund your annual SEP IRA payment along with payroll?
So again, the definition is group retirement benefits. And so if you're doing your personal SEP as an owner and all of your employees' SEPs, then yes, okay. It's kind of unclear, and there's been attorneys have taken different positions on timing. So if you're doing, for example, your SEP contribution for 2019, and you're paying that in your 8 weeks, would that be included? Because you meet your payments test, right? You cash out, but it was really incurred in a prior period. And so it makes it a little bit more, it makes it a little bit less unclear. If you were making that for a 2020 contribution, and it was because of payroll that you did during the 8 weeks, then I'd say you're great. You're right on. And so just make sure you've got good documentation and you make that payment.
Okay. Self-employed health insurance for the owners of an S Corp count as part of the forgivable portion of the loan?
If it's just for the owners, I can tell you that I'm expecting the SBA to come out with guidance that really prohibits any owner enrichment. And when I say owner enrichment, again, this PPP loan program was put in place to preserve payroll, employees, not owners, okay? And the SBA has a long history of making sure that their loans are not used to enrich owners. And so usually if you have an SBA loan in place, you can't take out cash distributions. You can't do owner distributions.
Right.
And so right now, if that health insurance is only for the owners, I think it's gonna come out that the SBA is gonna say, well, why not all the employees, right? So you got to be a little bit careful. If you're the only employees, then I say yes, because that's part of your monthly expenses. But anything that's specifically only for the owners, or the owners are going to be enriched by it, that's you're into a very gray area, and that's usually where the SBA has a history of coming back and trying not to have people use it for it. Remember, gotcha. This is not the program to go buy a houseboat at Lake Powell. This is not a vacation, funding. This is for your employees.
Yeah, absolutely right. This is a really interesting question here. I'm sorry I missed this one earlier.
Troy, let me add one thing to that owner enrichment. One thing that came that has made a few people nervous since the first and second rounds was the idea that the eligibility test, the impairment test, that the company did not have access to an adequate alternative source. And so I think what that's done is it's caused some owners and companies to look and say, well, the idea of adequate or sufficient liquidity or capital to inject in the business in lieu of the PPP, it is really an arbitrary number. And so to further drive home Chris's point, I think that's where we've seen a lot of people say, well, I got a $200,000 PPP loan, but as the business owner, I've got 250,000 sitting over here in a personal savings account. Rather than run the risk, I'm just going to pay back my PPP loan and just avoid it. And so there's been some of that too, back to the SBA's desire to not sort of enrich the owner side of the equation. So,
Right. I think as long as you remember to stay focused on the employees with what you're doing, you're going to be fine. I mean, that's really the aim of the act. So this question: if you're a self-funded health insurance plan, how do you calculate what qualifies as forgivable medical costs during the 8-week period?
Yeah, I was going to say there's no guidance. And so if you're self-funded, these may be for truly expenses that were incurred 6 months ago. Could be claims from January, February, but you're paying now. What you need to show is that you have a monthly payment, right? You're probably funding those expenses monthly. And so if you have a minimum funding amount, I think that's going to be your safe harbor there, because it's really, at the end of the day, it's your group health benefits that you're paying.
Mm-hmm.
It's just that instead of making payment to an insurance company, you're going to a funding pool. It's just that amount is going to fluctuate from month to month. You just need to be able to prove out that it's part of your monthly expenses. And hey, wow, that second payment is more than on your first payment, but this is why. And so just, document. I think you're meeting the spirit and the intent of the law.
Mm-hmm.
And it's just yours is a little bit different vehicle than most others.
Okay. What about HOA fees? Is that included in your 25% expense? HOA fees.
No, rent expense.
That's what I thought. I think we've answered this one before too, but is there $100,000 cap per person on payroll?
Yeah, let me make sure everybody's understanding. So if you have a person that's making $100,000, you don't throw them out of the equation, and it's not a cliff forgiveness. Okay. Right. So if they make above 100,000, they're capped at 100,000. So let's say you had an employee regularly, they make 150,000. You'd only have forgiveness of 100,000. So it's capped at 100,000. That's the annualized amount. And so for the 8-week period, the maximum payroll that you could have forgiven is $15,385, which is 8/52 of 100,000. Okay, so it's maxed out. Mm-hmm. And so but the other thing is remember, for group health and group retirement, for those, there's no cap. So it doesn't matter if you have people that are in that plan that make $200,000, as long as it's group benefits.
Yeah, and I think I saw that question pop up earlier, and hopefully, because I know we did a lot of back and forth with our clients, hopefully your bank did all of that calculation work on the front end to prepare for the back end.
Okay. This goes back to, if an employee leaves me and I replace them with a new employee at the same salary, do I still have a salary reduction? In other words, is salary reduction in total or employee by employee?
Yeah, no specific guidance. When you read the CARES Act, you'll take it by employee by employee. But it's going to be very, very hard to put that into place. We were working last week with a temp firm, and because of some of the exemptions, they have almost 2,500 employees, right? But the 2,500 employees they have today are very different than the ones they had in January, because it's a temp firm, right? The AICPA has sent to the SBA and the Department of Treasury a plan to use those expenses on a group basis. So it's a group headcount and it's a group payroll amount. Whether the SBA or the Department of Treasury uses that as a plan, it's actually the best plan that I've seen so far. And it would use those as a group. So you would have, instead of individual by individual, I think it'd be like position by position. And so if you had somebody who left, whether you fired them or whether they left of their own volition, If you hired a person to replace them, you wouldn't be impacted in those calculations. Again, we're waiting for more guidance. I really like the AICPA's group plan to do that because I think it meets the intent of the law and the spirit of the law, and then it makes it easier for companies to really put it into place.
Okay. So this is in the numbers question here. So effectively, the most one person can be counted during the 8-week period is 15,300. 8 weeks annualized to 100K.
Yep, 15,385.
385. There you go. There's a numbers guy for you guys.
850 seconds. I rounded up $1. It's actually 15,384.64, and I rounded it up to 5.
Truly an accountant.
I mean, somebody's going to be left with a 35-cent unforgiven loan.
That's right. That's right. This is kind of this goes along with this. If we satisfy the salary maintenance requirements and achieve full forgiveness, but during the 8-week period we are also repaying owner loans, will that be deemed as owner enrichment?
You got to prove what you spent the money for. The forgiveness piece of it has to be spent for payroll. This loan is not meant to refinance other loans.
Yeah.
And so make sure that I mean, if you're paying it back, you know, everybody has different operations going on with your companies, right? But you want to be able to prove that you use these proceeds for payroll. At the same time, if you're paying back another loan, right, that's through other money that's coming into the company, hopefully, right? If you're using PPP loan money to pay back another loan, that is not an approved expense. And that kind of crosses the line of you're not fulfilling the PPP loan promissory note that you signed. And so I think you'd be in trouble at that point. If it's just yeah, go ahead, David.
I was going to say, I think, Chris, that's why you saw a lot of, I know you weren't a big fan of this, but I think that's why you saw a lot of guidance from the bank saying, well, let's put the PPP money over here, separate account, and let's run payroll through here for the next 8 weeks. Gotcha. Versus, because to that question, all money's fungible. If, you know, in a vacuum, the spirit is, you know, it's this, you know, you got $1 million goes to payroll, but you know, if you commingled it with regular operations, you know, that's where your comment around documentation really matters. So I think that's why you saw a lot of banks. I know we did the same. Let's set this up over here. Let's just run payroll out of here for the next 8 weeks, just so it's easier to say, well, hit print on 2 months bank statements. Here's all the detail. You know, now you've got your audit trail for your PPP, but you know, it's 6 and 1/2 dozen in the other.
Absolutely. Can I pay myself or employees an increased salary temporarily to make sure we use all the PPP loan proceeds?
No guidance against it. Again, be very careful with owner enrichment. And so if all of a sudden you were making $1,000 a month, you know, and taking owner distributions, and now you raised your salary to max out the 15,385,
raise some flags.
That'll kind of look. If you gave everybody across the board 20% pay increase during the period, I think you'll be fine with that. Again, it's group. You're taking care of your employees. It's group payroll.
Okay.
And just make sure that if you had any of the higher wage earners in there, that you're not accidentally paying them more than the 15,835.
Right. Okay. Is business liability insurance forgivable?
Say that again, business insurance?
Business liability insurance.
I don't believe so.
No,
Okay.
that's not, insurance is not included as a utility. Even though, you know, for example, if you have a fleet of vehicles and for that fleet of vehicles, the only expense that they're really thinking of as a utility is the fuel, not the insurance for those vehicles, not for other maintenance expenses, but the fuel that you burn each month. So think working capital payments, stuff that's going to keep your doors open.
Okay. My landlord bills me back for utilities, but there is a lag. when the expense was incurred. If I paid in 8 weeks, even if for earlier utilities use, is that okay to include in the 25%?
Unclear right now with the guide because there's no guidance on it.
Mm-hmm.
You certainly meet the paid requirement. Make sure that it is part of your lease, right? And so if you're paying those expenses as part of your lease, then it should be part of it. It's really considered lease expense. If it's paid during the 8-week period, you certainly meet the cash out, the payments made definition. If it's for operating expenses back in November and December, it's unclear because it's kind of a prior period. But the thing is it should be, think kind of monthly payments. And during this 8-week period, you should see 2 months of expenses. And so if you have 2 lease expenses, 2 rent expenses, I think you're going to be okay. If you have 5 lease expenses during that 8-week period, I don't think that's going to fly. But if that's a monthly, regular, recurring expense that you make, then I think you're going to be okay.
Okay. Even though it's prior to the event, it's still the way it works. So,
Yeah.
yeah. Okay.
Yeah, I think we had a question similar to this earlier, the idea of, do they include the expenses on an accrual basis or a cash basis? And so I think it's, to that particular question, I mean, if it's paid during the 8 weeks, since I believe the guidance I've seen, it's cash-based expenses, not accrual-based expenses. As long as you didn't accrue that expense in October and November, I think it should be qualified. So.
Okay. I think we've answered this before, but I'm going to bring it up one more time. It's sitting here. Does the FTEE and salary amount need to be restored by the end of the 8-week period or June 30th?
June 30th in the law. So in the CARES Act, June 30 is the magic date.
Okay.
The intent of that was that all these loans were going to be done and funded, and your 8-week period would be either running out on June 30th, right? Because the original CARES Act did not take into account the second wave of funding.
Yep.
And when the second wave of funding was put into law, it did not change that June 30th date. And
Okay.
so it's one of those things where it's inconsistent. But right now, as of today, that's what you have to look back to.
Okay.
Which means I'd plan for it to potentially change. And it could, but, just if you're going to rehire people, if you've reopened, even on a limited basis, and you intend to rehire these people and you've gotten your money, it's probably best to just get them rehired now. And so you don't run the risk of anything.
Yes. Yeah, agreed. Okay. We've covered this multiple times, but I want to make sure we cover it one more time. Is it okay to pay payroll bonuses to corporate shareholders to reach the 75% required amount?
So are the corporate shareholders employees? It's employee, it's payroll protection plan.
Right.
If it's inclusive of all of your employees, I would say yes. Anything that's owner enrichment, which your shareholders are owners, is going to, this is not the loan that you want to take out and a year and a half from now, you're the subject of an audit and that comes out, right?
Right.
This is, as David said, any loan that's over 2 million, they're going to look at an audit. That doesn't mean that they're not going to look at the others. And so if they see anything egregious, that's what the SBA goes after all the time. And so again, if it's part of a group plan for all of your employees and give them a bonus, I think you're fine. You're meeting the intent of the law, the spirit of the law. If you're going to pay the 3 shareholders and not pay the other 50 employees, then no.
Okay. I'm sorry we're not able to get to all you guys' questions. There are 70 questions in the question and answer box, just so everybody understands. We've got 40 of them answered so far. And Andrew, I sincerely apologize. This recording will be made available to everybody once again by the end of the week. And we will go through the chat feature and answer all those questions as well. Any particular documenting recommendations regarding pass-through entities such as S corps?
Just document, and then document a little bit more. So this is like, I hate to say it, but this is like an accountant's wet dream, right? They're like, everything's going to have over documentation. And so you want to make it very easy for bankers to review and then approve your forgiveness, right? And the more documentation you have and the easier you have for them to do it, it's going to be smooth sailing, right? But if you have bad records and stuff doesn't tie and you have faulty amounts, then that's where, Dave's going to look at it as like, well, hey, their loan's for $1 million, but I can only come up with 500,000. I can't forgive the other 500,000. I've got to have good documentation, right? And so start putting it together right now. This is, it's just more, it's a more part of your loan documentation process, and put it all together, and it should be smooth sailing, and we want to make David's job really easy to approve your forgiveness.
Okay. Here's one. Does the rent paid to an LLC 100% owned by the corporate shareholders count? So the LLC is a related entity. Rent is rent, right? Rent is rent. It doesn't matter who's being
Rent is rent, as long as you have a lease agreement.
Right.
You have to have a lease agreement. And if all of a sudden you haven't paid yourself rent in a year, that's not going to fly, right? Because it has to be on an active rental lease agreement. And this was just 8 weeks or 2 payments that you probably have already paid your January, February, March, April payments. And now you're going to make the next 2 payments from your PPP funds.
Right. What I figured. And you can't just suddenly give yourself an increase in rent too. Like, if you're, normally paying $5,000 to increase it to 10, that's going to raise a flag there.
Yeah.
It's going to cause some problems.
It should be, yeah, go ahead, David.
I was going to say, especially if it starts eroding and getting you beyond that 25% of other eligible expenses kind of, broad categories. So.
Right. Okay.
Hey, Troy, I have a 12:30 hard stop, so I will stick around for 2 more minutes and then I gotta go.
Okay. We've already answered this question. We've already talked about bonuses several times. I plan to let somebody go. What if you had already planned to let someone go before the crisis and signed a separation agreement in February for a last day in February?
So separation and severance agreements are W-2 wages and a payroll, and are eligible for the forgiveness. So even though you have a separation agreement or severance agreement in place, it's going to run, your payment should run through payroll. Legally, they should be running through payroll and would be eligible for forgiveness.
Okay.
Yeah, and I would be curious if they actually, if the separation was in February, I'd be curious if that particular employee was actually considered in your loan amount calculation.
Yeah.
I mean, they would have been there, when these things, the first guidance we got was it was all of 2019 payroll data. Then shortly after we started taking applications, new guidance came out that said you can use it on a TTM basis. And so you just have to kind of think of, well, was that person, since they were separated in February, and was my loan calculated based on 2019, or was it based on a TTM, and did I factor that person in or did I not factor that person in? So.
Great answer. For interest on debt, if we usually pay once a year in November, our yearly interest, can we apply 850 seconds proration of our annual interest? And do we need to pay that 850 seconds proration within the 8-week period, within the 8 weeks?
So yes and yes. To be eligible for forgiveness, you have to pay. It's payments made.
Right.
So accrued expenses don't count. It has to be paid.
Right.
If it's an annual type expense, what I've seen most attorneys do is they want to annualize it 850 seconds of that annual expense. And so I did see a question in as far as an annual bonus, right? And so if it's part of your annual bonus, you would get, and if you paid it all in the 8 weeks, you only get 8/52 of that forgiven, because only 8 weeks of it is for, there's only 8 weeks of it that would be incurred during that period. So remember, it has to be payments made, cash out, and it has to be incurred within that period. And so interest expense, you'd have 8/52 of that annualized interest.
Okay.
Hey, Troy, I've got to run. Yeah, please send us the questions, and we'll get as many of them answered as we can to just sort of pile on to anything Chris continues to answer. But I appreciate the opportunity. Thank you, Chris. Thank you, Troy. Thank you for those who joined, and look forward to the next webinar and the Elevate conference.
All right.
Thank you, David.
Hey, thanks,
Appreciate your
David.
time.
See you guys.
Thank you. See you, man.
Troy, I'm good. I'm good. You can keep going.
Okay, you got a time constraint, Chris?
Yep. Nope.
Okay, good. Does an increase need to go to all employees or just employees who make less than 100K?
Obviously, the employees that are making less than 100K, it would look better to reward them. And if they're above 100K, anything else in addition you pay to them is not forgivable. And so if you want it forgiven, those employees making less than 100K would be part of that.
All right. Timing question. I think you may have discussed this a little bit, but with the PPP loan applied for on April 3rd, but not approved and dispersed until the 3rd week of April, we stretched negotiations of rent, mitigation, deferral relief for April through June rents until we determined what, if any, PPP we were to receive. Once received, we paid the full April rent. Will this count within the 8-week window towards our 25% rent / other cap?
So I would take a look at your what you're going to pay in rent for the 8-week period. And if you have 2 payments in that 8-week period that you're going to ask to be forgiven, I think you're going to be just fine with it. If you're going to try to ask for 4 payments, so 4 monthly payments to be forgiven within that 8-week period, I don't think that's going to fly. Think monthly payments and timing. So it's just unclear with that if it was accrued prior to the 8-week period. So accrual and accrued are accounting GAAP terminology.
Right.
Incurred is not defined. The only thing that everybody has been in agreement on is the incurred does not mean you can do a prepayment for like August payrolls. You can't prepay expenses for future, but it's unclear if that incurred and paid within the period is going to be for rent for January and February that you didn't pay till the 8-week period. But in total, for that 8-week period, you should have 2 rent payments. If you have more than that, I don't think it's going to fly.
Yeah, that would be a problem. Okay. And this was one of the first questions we got in, actually. We keep our books on accrual basis of accounting. Will PPP expenditures be measured using accrual or cash basis? Specifically, can we pay past due bills now and still avail of loan forgiveness?
Again, it's unclear with the definition of incurred. You certainly have to pay it within the 8-week period to have it forgivable. And in essence, what the intent was is to keep your company in business for 8 weeks. But if it's for expenses for 6 months ago and you're paying them during the 8 weeks, I don't think that's going to fly. Again, if it's for rent, utilities, you should have 2 months of payments. It's not meant to be the catch up. It's meant to keep you going for 8 weeks for the 2-month period.
Gotcha.
And so the most strict definition is those prior expenses would not be eligible, but there's no guidance for it. What I tell clients is that for that 8-week period, you should have 2 rent expenses, 2 rent payments. You should have 2 utility payments, so 2 internet payments, 2 phone payments, 2 gas payments. If you have 4 or 5, then it's not going to be eligible for forgiveness.
Right. So paying expenses in advance, like July rent, that would be a problem.
Yeah, I can tell you, I can tell you definitely that any prepayments will not be eligible for the forgiveness piece.
Yeah. Okay. We've answered this a couple of times, but my loan was funded April 15th. I was told I had to apply for forgiveness within 8 weeks, so by June 15th. Therefore, is it my head count on 6/30 or 6/15?
Again, the magic date in the CARES Act is June 30th, even though your 8-week period runs out on June 15th.
Right.
In the CARES Act, it talks about the soonest that you can ask for forgiveness is at the end of your 8-week period. I think most of the banks are looking to do kind of a more formal forgiveness process. So your 8-week period would run. Within 30 days, you would do a forgiveness application. The bank would then have 60 days to review it. Once they review it and approve it, they'll send it to the SBA that then will pay off your loan. That's why there's no payments for 6 months, right? Because it's going to take time to get through. And so if the bank is saying that you have to apply for forgiveness at 8 weeks, then you got to remember, guess who's going to forgive it? The bank. You got to do what the bank says. I can tell you that there's been stuff from the banks all over the board. We have some banks that won't, they put the money into a restricted fund and then they'll only reimburse you for approved expenses.
Oh,
And
wow.
then they've told the client, they've told those clients that at the end, they're just going to pay that back. And so if you don't use it for the approved expenses, at the end of the 8 weeks, they're just going to pay it back. And so every bank's going to be a little bit different. But guess what? You signed a promissory note with that bank, and that's who you have to deal with. Even though I personally think they're wrong, it doesn't matter. The bank is going to do the approval for forgiveness.
Right. Okay. This is kind of an interesting one. If we made our annual 2019 employer 401k contribution during our 8-week PPP period, can this be added to the loan forgiveness request?
See, if it's for 2019, I don't think you meet the incurred. If it was part of a monthly payroll, then yes. If it was for 2020 and you did the whole year during the 8 weeks, you would get 8/52 of it.
Mm-hmm.
And so the intent and the spirit of the law is it's 8 weeks of expenses, not a whole year. And so group retirement benefits that are tied in with the payroll activity for the 8 weeks, I think is going to be part of that. If you're doing last year's profit sharing contribution, then I don't think so. The other thing you might want to look at and talk to your provider, your benefit provider with it. And instead of calling it a 2019, you just call it a profit sharing contribution. And I think you'd have a better leg to stand on than if you're saying it's 2019. But every plan is going to be different, and that 401k plan is certainly going to have different rules and regulations of when you can do that contribution. But if you do a discretionary profit sharing in 2020, I think you're going to have more a leg to stand on to say that it's part of the forgiveness process.
Okay. Another timing question. What if we prepay a previously deferred bonus normally payable in October?
So now you're prepaying an expense. Prepaids are not eligible for forgiveness.
It's previously deferred bonus, though.
Yeah, previously deferred. What you're going to call it now is a discretionary bonus for the coronavirus that is payable during the 8 weeks.
There you go.
If you tie it into something that's in the future, it's definitely not. Even though, and if it's something that has happened previously, don't tie it in with that. Make it a discretionary bonus plan. And again, if you do it for everybody, if everybody's included with it, then I think you're going to be good.
Okay. Are payments to single member LLCs considered payroll for forgiveness?
So single member payroll or single member LLCs, you get 8/52 of your 2019 net income. that's what's going to be forgiven. What I would do is take that amount, the maximum amount would be that $15,385. Pay if you're maxed out, you would make that payment to you during the 8 weeks to show that you've moved money in, and that's your forgiveness amount for payroll. Otherwise, if you're doing like a 2,000 or 5,000 a month distribution, I would just go back. What's your maximum forgiveness amount? That 15,385. Show that that is being paid out during the 8 week period, and that will be your forgiveness amount.
Okay. Is trash and cell phone bills or just landline considered a utility?
Not defined, but if it's part of your monthly bills, monthly payments, I think you're going to be okay. So monthly phone bills, monthly internet is kind of interesting. In the CARES Act itself, it doesn't say phones, it says internet, but everybody includes that with their VoIP phones, and the intent is that phone is a monthly expense that you do. Yep. And if you have trash pickup and it's a monthly expense, I think you're going to be okay with that.
Okay. How do you show payroll payment as an independent contractor? Do I invoice myself?
No. So again, if you're an independent 1099 contractor on your Schedule C, you're maxed out with 850 seconds of that 100,000, or excuse me, 850 seconds of your 2019 net income. So if your 2019 net income was above 100,000 for your Schedule C, you're maxed out at that 15,385. And so I would just show that being paid to you during that 8 week period. That would show that it's been paid out, but it's not so much your payroll amount, but it's what you were actually approved for.
Okay. We're down to 18 questions in the Q&A box, Chris.
Okay. No problem.
Do invoices need to be dated within the 8 week period? We've covered this multiple times.
True definition, and the most conservative is yes. So it has to be services within 8 weeks and paid within the 8 weeks. That's the most conservative. Again, okay. If you're paying your April utility payments in May from your PPP program, and you have 2 of those payments within the 8 weeks, I think you're just fine. If you have 4 of those payments, then no. So it's kind of, and utility payments always come after. They come in arrears. And so you just got to, you're going to make 2 payments, and you're going to get 2 payments forgiven.
Okay. Self-rentals be allowed for PPP forgiveness?
If you have an agreement in place as of February 15th, they've not given any guidance on related party rentals, but it's very specific that you do have to get a rent, or you have to have a rent agreement or contract in place prior to February 15th. If you can prove that, yeah, no problem.
Yep. Okay. Let's see. I thought the 100K compensation limit was only for calculating the eligible loan amount. Please confirm it also applies to calculating the eligible loan forgiveness.
Yeah, so that's specifically, it's capped out for the loan forgiveness part of the calculation also. So you did have to take that into account with what you could have, what you could be approved for in your 12 months of average payroll. And you should have gotten 2.5 times your monthly average payroll, but your employees would have been capped out at 100,000, and then your forgiveness amount is also going to be capped at the 100,000.
Okay. You mentioned you should get a waiver if employees that separated on February 3rd doesn't want to come back before June 30th, in part due to the severance offered. Can you please elaborate how this case will be treated so we don't get penalized in calculation, especially as we went from 4 full-time employees to 3 full-time employees before the crisis?
Yeah, the only thing, they've not given us any examples of how it would flow through the calculation, but what they have said specifically is that if it's documented and in writing that you've offered somebody to come back to work and they haven't, or if you have this type of separation agreement, you have it documented, it should not impact your your steps 2 and step 3 in your forgiveness reduction calculations. They just haven't given us examples of how it flows through. So it should not impact you, but as more guidance comes out, we'll obviously get that out to you.
Okay. Would health insurance payments for only one employee count as forgivable if he is the only employee qualifies for health insurance?
Yes, yeah. If that's the only one, as long as that's been a monthly payment you make every month, yes.
Okay. Along those lines, is group life insurance payments forgivable? And how about dental and vision insurance?
No life insurance. Life insurance is not a forgivable expense, so that does not count. So group term life is not included in that. Health insurance, it's broadly defined health. So if you have dental and vision, yes. So as long as they're part of a group plan.
Okay. Can you prepay commissions if they are owed after the 8-week period?
Are they earned within the 8-week period? So some companies, they pay out quarterly, but at the end of the 8 weeks, you may have 8 weeks of commissions to be paid, and normally you would pay that out in 3 months.
Mm-hmm.
If you don't pay them out during the 8-week period, they're not subject to forgiveness. And so if you want that as part of your forgiveness process, you just pay your commissions early.
Okay.
Yeah, so accrued payroll or accrued commissions are not forgivable. Has to be paid out. And so maybe you move up your payroll. We're going to be doing a webinar with Every that does payroll every day if you want, right? And so for them, they don't have any accrued payroll. And just because you're choosing as a company to pay them sooner, if it's already been incurred and you pay your employees, you should be good.
Okay. How do I document payroll as an independent contractor with the following scenario? I have 1099 miscellaneous income that is paid to an S Corp. I do not have a Schedule C in my personal taxes. The net S Corp income is reported on Schedule E.
Yeah, you'd have to go back to what they originally gave you funding for, and they should have looked at your 2019 tax return. And if you were showing 1099 income that then flowed through an S Corp, your maximum amount for forgiveness would be the 8/52 of 100,000, which is that 15,385 number. And so you would just document that would be flowing through to that entity. And so, document, show the payment going out, and document the calculation for it. It's not payroll, but that's what's going to be forgiven.
Okay. Someone asked, if I got $100,000 PPP loan and a $10,000 grant through the emergency, through the EIDL grant, I can only get up to 90,000 of the PPP loan forgiven?
Correct. So in total there, they got $110,000, okay? And when they go through, and if they paid $100,000 in payroll, right? And it was all approved expenses. And so when they go in for the forgiveness, they'll actually have 90,000 forgiven.
Mm-hmm.
They'll have a $10,000 loan. And so you could use the $10,000 to pay that back if you wanted. And in essence, you got 100,000, but you don't get double benefit of it.
Gotcha. Makes sense. On a $150,000 PPP loan, do I have to prove no access to outside liquidity or that I need these funds?
You'd be able to prove that you need the funds. In essence, when you signed when you signed your loan documents, you said that you needed funds and you'd been damaged by the coronavirus.
That's right.
I don't think you need to show that no other bank would approve you during this time. And for 150,000, I mean, they're really going to be looking at loans of 2 million and above for that specific. I know there's some new guidance that's out there. There's a frequently asked question, I think 46 out, that it's really for larger companies and entities, they need to be able to show that. And if you're below it, you're probably safe harbored, but just be able to show did you have a reduction in revenue? Is your sales down? Did you have to lay off employees? What's the damage piece of it? And so from the loan documentation you've already signed, you've basically already declared that you've been damaged by the coronavirus and that you need these funds. To be able to show that you had access to other funds, that's a hard test to do. It's a lot easier with publicly traded companies, but for small businesses that have taken out 150,000, I think you're going to be okay just by documenting what issues and damages you've had because of the coronavirus.
Okay. If we reduce salaries before we applied for the PPP, can we go back to the original salaries and do retroactive payroll?
Can you do retroactive payroll and make it part of the forgiveness process? I would say yes, because if you're salaried, it doesn't matter with the timing. And so if you've increased them if you paid back what you reduced in March, I think you're going to be fine with it. For example, we did the same thing internally. We took a salary reduction for all partners and stuff. So, these are really uncertain times, and we've gotten funding, and so we've restored those. So yes, make sure it's well documented, and it's across the board, and it's not just for the owners.
Okay. How should we think about part-time employees who fluctuate above and below 30 hours per week in terms of calculating FTE during the measurement period, January 1st through February 29th?
Yeah, it can be very convoluted. There's probably about a 50-page document for calculating full-time employee equivalents under the Obamacare Act, the ACA. But in essence, think of it as if you have employees, if you have one employee that works 60 hours a week, you don't get 2 full-time employee equivalents, you get 1. If you have 5 employees and they all work 60, or they each work a total and you get to 60 hours, then you have 2 full-time employee equivalents. Just be very consistent with how you apply your rules. And if you want some further guidance with that, go ahead and send me an email and we can get you that ACA Act stuff. And if there's any future guidance on it directly from the SBA, then we could also do that. I think that they're just going to come back with that 30-hour-a-week process. Just make sure that you consistently apply your rules. And it's usually for all the part-timers, you throw them in a group, and for every 30 hours, you get a full-time employee equivalent. If you have anybody that's working more than 40 hours, you're capped at the 40 hours.
Gotcha. Okay. Also, I thought 1099 contractors were included for forgiveness. They were included in the original loan calculation, if they were included in the original loan calculation.
If they were included in your original loan calculation, your banker was wrong. So it should have been just payroll. It's payroll protection plan. If you have a 1099 person that you pay, they were supposed to go apply for their own PPP loan. And so as you go back for forgiveness, then, that it's only what goes through payroll. So payments to contractors that are 1099 payments are not included in your forgiveness program. We've seen lots of mistakes and issues with different lending institutions that haven't had time to review everything that was given to them. And so if you included 1099 contractors in your original payroll amounts that you asked for the loan, then that was incorrect. And on the forgiveness part, it's very definite that this is the payroll protection plan. It's only W-2 wages that are included to be forgiven.
Okay. The PPP loan was also available to self-employed individuals. That is how I applied for and was approved for the PPP loan. How do I document payroll for the forgiveness portion? Do I need to hire a payroll company, or do I just write a check to myself as my monthly payroll from my business account? Also, do mortgage payments or HOA payments count toward forgiveness if you're operating a self-employed business from your home?
So let me answer the first part, and then we'll come back to that
Okay.
mortgage piece. So to document, so you don't need to hire yourself or put yourself on payroll. You get 850 seconds of your net income from your Schedule C from 2019. If you haven't filed your 2019 taxes, you're going to have to send, as part of your forgiveness package, your 2019 Schedule C prepared, and hopefully it should tie out with your tax return that's maybe filed later. Okay, that's the maximum amount you get. And so if you had $100,000 net income, you get that magic 15,385. I would just show that being paid to you during the 8-week process, and you move that money from your operating account to your personal account during that time frame. Okay, going back to mortgage interest for a home, no, that does not count. You do not get to take self payments. And so if you have an office at home, you know, I wish I was in a beautiful mountain setting, but guess what? I'm at my office at home.
Right.
I don't get a deduction for it. I don't get to deduct the mortgage interest. And it's not, so it's only mortgage interest for an office building that's within the company. So if you had an office building that you were paying for, it's that mortgage interest that is forgivable.
Okay. Let's see here. For rent, what about 3PL monthly storage costs?
Is it going back to a rent or lease agreement, or is it a PPP agreement? So if it specifically says lease and rental of that space at that triple P, then yes, it should be included.
Okay.
If it's for, you know, pick, pack, and ship, then no. But if it's specifically part of that agreement and it says leased space on it, then yes.
Okay. Can you, let's see, here we go. Can you confirm only interest on loans that are secured by mortgage property will be considered? What if the loan isn't secured by a mortgage property?
If it's unsecured, so if it's like on a credit card, then no. It's specifically interest that's mortgaged to a building, real property, or mortgage to equipment.
Okay.
Mortgage secured to equipment. It's kind of, they didn't give out a lot of guidance with it. That's the interpretation of the, what's the attorneys, not the ABA. Not the, anyway, the interpretation is that if it is secured by property, so secured by a building or secured by equipment, then that interest only, interest is forgivable, okay? And so if it's unsecured debt, no.
Okay. Do I have to have the exact same number of FTEs, 34, or can I stay at 30 and do bonuses for all the ones that stayed?
So remember, it's steps 1, 2, and 3. So the first step, you'd be fine, right? Because you're going to maximize your pay, the amount you paid out, right? But then you got to take a look at your head count. And if your head count goes from, what was it, 34 to 30,
Mm-hmm.
then you're going to take a haircut. You're going to take a reduction of that forgiveness amount.
Right.
If you have 34 employees as of June 30th, I think you're okay. But if you have less employees, you may have paid out, but you're going to have to take a haircut on that and take a reduction of that forgiveness amount because your full-time headcount is not up to where it was before.
Okay.
And remember, you can take a look at that to last year, so 2019, or take a look at it for February or January and February and use the best amount there, the best number of employees.
Okay. We received our funds on Monday, May 4th. We paid bi-weekly and paid on May 8th for the 2 weeks ending 5/3/20. Can we include the 5/8 payroll in our costs?
It's unclear at this time, and this is why you need to model it out of what you're going to pay. So payments made. So if you pay out that payroll, it's obviously cash out. You're meeting that definition. But did you incur that payment before you got your loan, or was it within the period? And that's where it's unclear right now, right? Because you've got a timing difference. And if you want to get super technical, were they hourly or were they salaried? So if they're salaried employees, it really doesn't matter. They can be paid once a month, okay? But what you want is during that 8 weeks, you want 8 weeks of your payroll, okay? And so model it out, and if you have accrued payroll at the end, you might move up that payroll and pay it out and make sure that you have 8 weeks of payroll during that period. And because right now it's unclear for that payroll that was probably accrued before you got your loan, but it was paid during that 8 weeks. Super conservative? No. Practicality? Probably, as long as you have 8 weeks of payroll.
Okay. And I know we've answered this question before, Chris, but we'll just go this from Gregor. What if you had already planned to let someone go before the crisis and signed a separation agreement in February for the last day in February?
Yeah, just document.
Mm-hmm.
Again, if it's for that type of an agreement, I don't think you can be held liable to have that headcount replaced if it was part of your reduction, but there's just no guidance yet. And to get, I'll be honest with you, to be that super technical, I don't think you're going to see much guidance on that. And so you're going to have to make a good faith effort of meeting the intent of the law, which is to have your employee headcount and your salary compensation amounts restored by June 30th. If it wasn't part of the coronavirus pandemic, then document and present a case for it. And again, it's really what your banker is going to approve. But you know, this isn't part of a furloughed employee or laid off.
Yeah.
So
is the 100,000 gross compensation just wages, or do you have to factor in wages plus benefits paid?
it's anything that's going to flow through their W-2. And so if you're paying benefits for them and it flows through their W-2 payroll wages, then yes, it would be included. Most of the time it's not. So again, it's anything that's going to flow through to box 1 on the W-2, then you would include that as the 100,000. If you're paying for benefits separately, so they have 100,000 of payroll, and then they get 5,000 of insurance, health insurance benefits. If it's being paid separately, then you should be fine. It's just part of your group benefits. Mm-hmm. And remember, for group benefits, group health and group retirement benefits, there's no cap on those.
Okay. Jennifer asks, if we are close to meeting the PPP 75% threshold, can we give a one-time bonus to employees to hit the number?
Yes, again, as long as it's across the board and it's for everybody. Don't do any bonuses just for owners. Don't know owner self-enrichment, but it's perfect. You're just fine if you do a coronavirus bonus. Okay. And especially for your employees that have been loyal with you and have stuck through these hard times. I think that's a great thing. That's what that's what this program is for payroll.
Right. Okay, what about employer contributions for employees' HSA accounts? Are those forgivable?
As long as it's for a group health plan, yes. And so
the health savings account, is that okay too?
Yeah, I think it meets that definition of group health plans, because they, instead of paying insurance, they're paying into that health plan that's supposed to be used for health insurance or health costs.
Yeah, okay, perfect. And we've already covered the dental premiums do count. They fit the spectrum of health.
Yes.
So let's see. I think we covered Andrew's question already. Covered that one. Did we cover commissions? How are commissions treated? For example, is it possible that commissions earned by an individual for Q1 are higher than the 8-week period? In this example, the base salary has not been reduced. If this affects the forgiveness calculation, should we prepay commissions inside of the capture period to avoid forgiveness reduction?
I would plan on paying within the 8 weeks so that you don't have any forgiveness reduction. There's unclear guidance, but any commissions, so when we talk about salary and compensation, it includes everything. So bonuses, commissions, and they're going to look at that total amount for that last full quarter versus the 8 weeks of the payments. So yes, plan on prepaying those commissions that would be paid out later, normally would be paid out later.
Okay. If we satisfy salary maintenance requirements and achieve full forgiveness, but during the 8-week period, we are also repaying owner, we answered this one, owner loans, will that be deemed as owner enrichment?
As long as you can show that it's come from other revenue sources, you don't use PPP proceeds into anything that's owner enrichment or refinancing. That's not what it's for. It's for payroll.
Okay. Dan asked, Chris said FICA, FUTA are not forgivable. Is that for both
Correct.
employee and employer portion?
So it's the employer paid. So remember, in gross wages, the Social Security and FICA and FUTA that's withheld from an employee is included in your gross payroll. And so think gross payroll, but you don't get to add on your employer paid payroll taxes for FUTA and FICA, so Social Security and Medicare.
Yeah.
Your state unemployment taxes or other state employment taxes that are paid by the employer are forgivable.
Okay. This is from Evan. To the rent question, my loan funded 5/4, which means the 8-week expires on 6/28. I had already paid a May rent payment on 5/1, so it doesn't qualify under the payment within the 8-week provision.
Right?
However, you just said if I pay my July rent prior to 6/28, that it won't qualify. So does that mean I can only submit one of those rent payments for forgiveness?
Yeah, you're getting good. You're super specific.
Yeah.
And what I would expect to see during the 8 weeks is you should have 2 rent payments, right? But because of timing, you missed the first one, right? And do you prepay the next one?
Right.
And is it really prepayment or is it really payment for that period? And again, we don't have any guidance. I would tell you that if you can show and you've paid 2 rent payments during that 8-week period, I think that should be forgiven, right? That's common sense. It's for 8 weeks. But because of timing, you've missed the stuff up front. And if you prepay in advance, it's really prepaid. So it's kind of, payroll is usually always earned and then paid in arrears, whereas rent, you're prepaying and above. And so I would just make sure you can make 2 rent payments and you show that for the 8 weeks, you have that expense on your forgiveness amount. And I think you're going to be okay. That's common sense. It's not accounting sense.
Right.
And we don't have any guidance yet either. But, I can tell you definitely you shouldn't have 3 rent payments. But I think if you have 2 rent payments, you'll be okay.
Okay. Tom asks, as an independent contractor, can we get above the $15,385 maximum with a one-time COVID-19 bonus?
No. So very definitely throughout the CARES Act, whether you're an employee, whether you're a Schedule C, whether you're a 1099 contractor, the maximum forgiveness amount is the $100,000. And that $100,000 is annualized, so your maximum forgiveness amount is that $15,385. So even if you want to do a one-time bonus to you more than that, it's not going to be forgiven. $15,385, your maximum forgiveness amount.
That's total. Okay. Chris, we got through all the questions, my friend.
All right.
Thank you
awesome.
so much for sticking around. I appreciate all of the attendees, and thank you to the 29 that are still listening and participating. I feel like this has been a great webinar, and we answered a lot of questions. Chris, thank you very much.
No problem. It's been a very complicated time. We're here to help out. Troy, I'm really looking forward to the Elevate conference here later this month. I think it'll be a great time to get together, and it'll be an awesome event.
Thank you, Chris. Everybody have a great rest of your day.
Thank you.
See you guys later. Bye-bye.
Bye.